Hi guys, welcome into another crash course video on Home Buying 101. I'm Gabriel, your Washington State Realtor, and today we're talking about credit and how you can qualify for a loan. So whenever you go to a lender and ask for money, they're going to base their decision to either loan you the money and how much to loan you based on 4 criteria known as the 4 C's. They are capital, capacity, credit history, which we'll be talking about today, and collateral. Now, your capacity is just how financially stable you are to take on new debt. Your capital is how much you have up front, how much cash you have up front to take care of the upfront costs like your down payment, your closing costs, etc., going into home ownership. Your credit history is everything that has to do with how well you've managed your credit in the past. Have you paid off your debts on time? Have you not? Etc. And your collateral is just the relation between what the fair market value for the home is and what the loan amount is. What the fair market value is determined by an appraiser who is hired by the lender, and we can cover that in another video, but essentially those are the 4 C's of how a lender will determine if they're going to lend you any money and what the amount will be. Now, when a lender is looking at your credit history, they're looking at a credit report. The credit report just has everything from your identity, your public records, anyone that's asked about getting a credit report, how many times your credit report has been asked for. And credit reporting agencies are the ones who gather all your creditors' data, how many people you owe and how much money you owe, and they put it all on this one report. So these credit reporting agencies, you might be familiar with the biggest 3, Transunion, Experian, and Equifax. They sell these reports to lenders and people asking for these reports. And your lender is requesting this report because they want to know whether or not to qualify you for this loan. So how do you determine a credit score, or a FICO score, as it's sometimes called? Well, the credit score is really just a reflection of what's based on what is in the credit report. So when it breaks down, it looks like a pie chart here, with the 2 biggest pieces of your credit score being the amount of debt you have and your payment history, which is just what is your debt and what is your relation to that debt in terms of have you been paying off on time, have you not been paying it off on time, etc. The length of time you've had credit for, the various types of credit you have, whether it's a car loan, credit cards, student loans, etc., and any new credit that you're taking on. All of this makes up your credit score, or a FICO score. Now, if a lender looks at your credit number, your credit score number, and determines it's too low for them to give you the loan that you're asking for, that's okay. You either apply for a different loan type or you work on your credit to get the loan you're looking for. If you're trying to work on credit, check out the links below to get in with a counselor and get you set up with a financial plan to get to the goals you're looking for. Thank you so much for checking out this video, guys, and we'll see you in the next crash course. Work on that credit.